Welcome back, everyone. This is our Gold Weekly Review. My name is Angelo Zitis, and this week's title is Gold Awaits Upcoming Busy Week to Determine Direction. Now, gold prices continue to move lower in the previous days, but steadied in the latest sessions, as this week could be crucial as to the direction of the precious metal for the remaining of 2019. Of course, certain fundamental drivers remain in place, but this week could be considered a make or break, as some events have the potential of setting the tone for the mid to long term. Our first point: gold traders are expected to turn their attention to tonight's speech by US President Donald Trump in New York. Traders will be interested in any comments on the US sign-off front, and especially his own view on the matter. In the past, his personal comments have been a major source for gold's direction, as he has been very direct on how he sees the situation unfolding, and so the speech most probably could create some volatility for the precious metal as well as for the greenback. Moreover, some comments from Donald Trump in the previous weekend indicated trade talks were moving along nicely, and that the US would sign a deal only if it's the right deal, basically repeating some comments from the past. He then also made comments on some reports regarding the US lifting tariffs off China, stating they could be misleading the public and suggesting the US may not be willing to do so. On the other hand, gold is trading approximately $50 below the price it was trading in our previous report 1 week ago, suggesting the market has been removing bullish gold trades or taking profits out. Our view is that the market is currently preparing for a deal, and investors may be moving money to riskier assets. However, we leave the door open for some turbulence to take place, as if the US is not willing to remove tariffs, we could see uncertainty prevail and gold prices strengthening. Yet, if Donald Trump tonight confirms that tariffs are rolled back, this could strengthen the dollar and consequently push gold prices lower due to the adverse relationship the two instruments keep. Questionable Chinese data. From a different perspective, financial data from China may have also moved gold prices in the previous days. According to other sources, gold traders may have considered purchasing the precious metal on Monday's opening, as some analysts believe China's producer price index, falling to minus 1.6% year on year, the most in more than 3 years in October, has influenced the price. The release may have also caused worries on the global economic outlook. Yet, the negative effect from the PPI may have been smoothened by the CPI rate, which came out very strong at plus 3.8%. This could be a warning that gold traders are monitoring Chinese financial data, and that any circumstances changing in the economic outlook of the mainland could weigh in on gold prices. Furthermore, gold traders may be interested in upcoming events that could move gold prices. In our opinion, the CPI rate from the US coming out tomorrow, Wednesday the 13th, in the American session, could move gold prices significantly. Inflation is a very important measure of the health of an economy, and in a basic sense, it is a rise in price levels. Also, on Wednesday, we have another crucial testimony by US Fed Chairman Jerome Powell, who will be giving his view on the US economic outlook. His comments have never been taken lightly by market participants, so we would advise further caution during the speech. Moreover, regarding the upcoming Friday, the 15th of November, again in the US session, we get the retail sales and industrial production growth rates, both very important financial releases from the US that have the potential of moving gold prices. As a conclusion, we must note that even though market sentiment is currently overshadowed by gold's latest sell-off, accompanied by the US sign-on developments, we would like to keep an objective outlook on the instrument's further movement, provided some other fundamental matters may still be considered as drivers. For example, Brexit uncertainty may follow us until the end of the year, while the negativity coming from Iran's recent nuclear activities, as well as the worsening of the Hong Kong protests, may prove more serious than they are considered for the time being. Moving now to our technical analysis, this is gold's daily chart. We found it appropriate to use a daily chart for today's report, as the price gold is currently trading at has not been seen since the 5th of August. Since our last report, gold has lost over $50 in value and is currently trading nearby the 1450 S1 level. If gold continues to be overtaken by bearish momentum, then the precious metal's next possible stops below our S1 could be the 1440 S2 or even lower the 1430 S3 levels. Yet, in an ultimate selling scenario, gold could even drop to our S4 1413 level, depending on how the news will play out this week. Please note the S4 1413 level was last seen on the 1st of August. However, in the opposite direction and in a bullish scenario, gold could reapproach the R1 1468 level, and if the power is significantly enough, it could be even lifted out to the 1480 R2 level. Even higher, the next possible level could be the 1490 R3 level, and in an extreme buying momentum, we could see traders aiming for the 1500 R4 round number level, as round number levels usually become target for gold traders. Now, if you've heard something in this report that you found useful, make sure you apply it to your trading. That's the whole point. Thank you very much for your time, and we'll see you soon.